All eyes are on the Bitcoin monthly close. And you better not blink, my friends, because it is rapidly bearing down on us. Tomorrow, of course, the monthly close. The crypto Wild West whale games have already kicked off. We're in full effect here. So we're going to climb in and see what it's all about. Hey, guys, it's Keith Allen. Glad to be back with you here on a Friday as we face the monthly close. So now, actually quite a bit to consider because what we're seeing in the order book at the moment is not very pretty. We had a really just an incredible month here, fast and furious through the month of August. We had that big correction coming in on August 5th after that Japanese carry trade unwound. That was like, almost a 30% drop from July's high. And then we had a recovery up to like 65K, which was nice. Good to see. Would love to see that right now, right? But things have faded back, obviously, since then. So we're now, again, testing support here at 58K. This is the third time now in the last 3 days, which is interesting, right? Of course, busy things coming up ahead that can all be triggers for volatility. We had some economic numbers yesterday that gave us a nice little bump, but that quickly faded by the end of the day. We had some economic numbers today that looked pretty good. At least were not. I guess they were kind of unremarkable. They met. It was rare that they actually hit the forecasted targets. So I think all in all, that was good news. Kind of points towards that softish landing narrative. Whether you believe the data or not, that's the data we have. So that's what that's what I'm going to go off of. Let's just kind of peek at some of these things that I'm talking about here. First and foremost, I guess we can just get this out of the way, and we can look at today's economic reports so you can see exactly what I'm talking about. Then we're going to look at FireCharts, and then we're going to look at the candle chart, and because we could speculate from here till forever on how things are going to play out. But I think we can do ourselves some good by really focusing on the technicals and the fundamentals, because that really is going to be the, I think, overriding factor when things settle down, when the volatility settles down, when the speculation goes away. Let's look at the facts, right? The charts don't lie. So I mentioned this morning's economic reports. We had core PCE come in, personal income, et cetera. All of this was really right on target, which really, in my opinion, is good news. Good news equals good news, or at least no bad news equals good news at this point as well. But I do think that the market still is going to remain in a bit of a holding pattern until we get through. Obviously, we have the monthly close. We'll have some volatility around that, but I don't even think that reveals the real move until we get to some of the additional data we have coming in next week. And the one that I'm most focused on is Friday's unemployment rate, because I believe that's where the Fed is most squarely focused as well. We expect to see a bit of a bump, but what we don't want to see is a big spike. So that's really what that boils down to, in my opinion. Switching over to FireCharts, I told you whale games in full effect. As you can see, we've got both well, this may be not. Let's see if this is actually a roof pull here, or if they just moved it down, and a rug pull here at this 58K level. So that kind of opens the door in both directions, quite frankly. So no, this was not. The resolution changes as we switch through time frames. So this was not an issue of this liquidity moving down. This was actually roof pulled. This actually may have been hit right here, it looks like. And so nonetheless, we have the makings for volatility in both directions. I tell you all the time, liquidity dampens volatility, right? I'm going to boost the color contrast here for you on the volume percentile here on FireCharts, so you can see exactly where liquidity is and where it isn't. And price can move through these thin areas, these darker areas of thin liquidity very, very easily. It takes very little to pump things up through that. And so we have a lot of those voids along the way, really all the way up to, 68, 69. We really don't get good concentrations until about 69K. we all know what that's about. 65K, obviously, a strong resistance here in this area. Our anchor right now is at the 50K range, where we've got about 23 million stacked there, but a bit more stacked below, another 9 million below that, and a little bit more below that. So um, if we zoom out, we can gain some perspective on this, and uh, I always find that helpful, to be honest with you. I'm going to zoom out to the 1 year chart actually and see what we can conclude from this. As I mentioned earlier in the week, I think it's good that we have some depth to this bid liquidity. What I don't like is the lack of volume concentrated near this active trading zone, right? We've got a nice ladder here, pretty dense. We have our highest concentration here at 50 million. So when we move out to this time frame, this really is a range of about from 50,500 down to about 49,750, and you're looking at it about 35 million stacked on that level. That's not a lot. We've got almost double that up above at 70K, and of course a nice ladder that's denser than this ladder going up. So there's a lot more liquidity based resistance, a lot more liquidity based sentiment above 70K. Sell pressure, of course, than there is for buy pressure. Now, if you look at the bin CVD down here, the purple line, most especially, I guess we could look at brown and purple. The brown mega whales, and the purple whales. The purple whales have had historically the most influence over Bitcoin price over the years, and yes, they've sold a bit off the top, but they're still well above. Let's see, they have sold about 12% of what they've bought over the past year, and really, quite frankly, since Christmas. So that's really when the buying began for these order classes. The brown mega whales have sold a bit more here, but still, they're net positive on their flows. Going into the shorter time frames, again, we have this monthly close here, and what I don't like, and you can see it here illustrated very well, is that we have some liquidity has left the building. Now, sometimes this happens because there's no sentiment for things to come down this way, but I honestly think that there is sentiment for things to continue downward, and I'll tell you why. Let's switch over to before you click out just on that bit of on that soundbite, I also have sentiment for why things should go up, and I'm going to share both of these with you so that you've got some perspective of where things might go, because nobody can say with any certainty that, hey, we're going to go up, or hey, we're going to go down. So I'm going to show you scenarios for both directions, and see if we can identify some areas that we think will be interesting targets, and hopefully to validate or invalidate some of our assumptions. So candle chart. Let's see. Let's start with this one here. So something that I do like seeing in this chart is that, and I'm going to expand here, make it even easier for us to check this thing out. So one of the things that I do like in this chart is that we have been in a consolidation range here. So what I don't like is that at the moment, price seems to be challenging that consolidation range, and I really want to see us close above that for the monthly close. We're on the monthly chart, by the way. So I'm always, of course, looking for new trend precognition signals. Perhaps we get one here, but I want you to notice kind of some of the things that we can see in the chart just historically, that when we have these consolidation ranges, these extended consolidation ranges, and we're now in 1, 2, 3, 4, 5, 6 months of consolidation up at this level. Even when there's a downturn to it, it tends to mark a bottom and start the next leg. Here's one that was a bit shorter. There was some downtrend to it, and then up we went. Here's another. Now this is a bit different, where we see things really breaking down much deeper. And then we, of course, had the COVID crash. So this was from the 2019 top. This marked the top for 2019, and then we of course had um, the COVID crash. I think we would have actually started to climb out here. I think this would have been the bottom had it not been for COVID, but no point in speculating on that now. It's history. So I do like that we have a bit of consolidation here. Even this was a downtrend that took us to the bottom. Um, of course, we had some help. I think we had some help on this one too, right? Whatever the case may be, consolidation ranges are a good thing to see. Now, what's not going to be good to see is if this thing just continues to break down. Um, we have from the all-time high, right? We did make a new all-time high back in March. From the all-time high, price has uh, corrected, I should say, on multiple occasions, but our deepest correction is to this 49.5 level, which is just about 33%. I think that there's room, and I've said for a long time that there's room for a 40%, even potentially a deeper correction than that. And I do like this this mid 40s range as a potential target. There's some confluence here with the trend line, so all of those things are in play for me as well. But we had spoken earlier this week about death crosses and golden crosses, and I want to show you something. I want to show you something. I want to make this go away first, and then I want to show you something here on the daily and weekly charts. All right, so yesterday these were actually touching into a cross, and the dip down, the dump that we're having right now has pulled these out of a golden cross, the blue 100-day and the purple 200-day. We've had a bunch of death crosses on the daily chart, and these death crosses do tend to lead to bottoms. Again, the question is this bottom going to be our local bottom, or is it going to be a deeper, like end of bull market, end of bull run kind of bottom? So one of the things that we often see when we have a series of death crosses, and particularly when we start to see a golden cross between these two moving averages, is retests of support at double bottoms. And sure, what we have going on here could qualify. We've certainly got lots of confluence here in this range, and this is a very good. This would certainly be a decent place to launch the next leg from. But just the overall sentiment of the market and seeing these rug pulls of liquidity down below makes me think that we could potentially go test this low and make this our mark. Now, where this landed, sub 50K, 50K is good. You know, we obviously had some consolidation here in the 50 to 52K range. It was brief, I should say, but I'm glad that we finally retested it, because we didn't retest the 40 to 45K range. We didn't retest the 25 to 30K range. And quite frankly, all of those things are still on the table. This is crypto. It's the Wild West. It could happen anytime. Is this a high probability move at this point? I don't think it is. This one, certainly we have the potential to do that. So what I'm looking at in terms of maybe invalidations, I'm building a longer term position. I'm dollar cost averaging my way down, but I certainly don't want to give back all the profits that I've earned so far. So I really am kind of, my line in the sand is really on this trend line, because I think that if we do lose the trend line, chances are, well, let's say the probability increases that we would go down and test this 25, 30K range. So meanwhile, upside targets, totally different story, right? And I do, for me, and this is just my take on it, yours might be different. And by the way, the live chat is open for anybody that wants to comment and share some insight. Love to hear from you. For me, the macro narrative is still intact. The trend is still intact. The post-halving narrative is still intact. The 4-year cycle narrative is still intact. Fed is cutting rates in September. That's an overall positive for the market and the economy. Um, and I think we still have lots of interest in Bitcoin. And so fundamentally, that macro view still looks good to me. The volatility that we could have between now and when things resolve, and by resolve, I mean getting back up into all-time high territory, which takes a lot of work, right? We have to reclaim this 2021 mid-cycle top. That was, of course, where this red box began, right? We had a lot of consolidation in this red box. We had this mid-cycle top, a wick through that red box. Things broke down. We then had really a manipulated distribution rally to get things up to a new all-time high, and that was the end of the market. That was the end of the bull market for 2021. So we've wrestled with this level a lot. I mean, since March, dozens and dozens of times we've wrestled with that 2021 top. Now that's not even in the picture just yet. We've got to reclaim these levels one by one, and quite honestly, after spending 2 weeks fighting to get back above the 50-day moving average, it is not good that we broke down, lost the 50-day and the 21-day moving average in one candle. Not a good sign. So now what's going to happen for the monthly close? Will we at least reclaim the 21-day moving average? Can we get back up into this range? Can we potentially even go after this 2021 mid-cycle top? So let's look at monthly candles once again and see where really the area we want to protect. And I think we're really kind of teetering on the edge of it now. As you can see, price just went sub 58K here. That's a scary proposition for a lot of people, right? And if you're leveraged, you might be worried about that on the long side. Meanwhile, look what's doing on the short side. And what I'm anticipating, and I could be wrong, I'm wrong plenty of times. I'm anticipating, we had a cluster of longs down here that were squeezed, that were liquidated, and now I'm looking to see these shorts squeezed up to at least 62, potentially up to this 64.5 range, and that 64.5 range is one that's very important to me because of the fact that that's where this 2021 mid-cycle top is. It's just above that at what 64,895. So I'd much rather see a close up in this range than down in this range on the monthly. Now, if we can hold this range at least, and you can see the confluence here from all the way back here in February of 2021. We had tops. We've got bottoms here now. Holding above this range is, in my opinion, not only good, but pretty important for Bitcoin at this point. And so a lot can happen between now and tomorrow's monthly close. Then, of course, Saturday, we have a weekly close. And then we have Monday where TradFi markets are closed. And that also seems to create some Wild West opportunities in the crypto game. So XBT3 says lick levels back test real bad. Okay, well, that may be the case. Sometimes they get hit, sometimes they don't. We saw them get hit recently on the downside, on the long side. Will they get hit here? This to me is low hanging fruit. So we'll see how this plays out, right? I mean, obviously, if things get pushed down, these guys can just close their trades and avoid that problem and take profit. But if we get this crazy pump, boom, into the close, then things change. So those are things that we will wait for. I appreciate the input and insight, XBT, as always. So aside from that, what I'd really like to see, like the sign of strength to me, would be a close above this mid-cycle top, or at least anywhere near this mid-cycle top. This candle a few days ago, if you recall, if you were watching the analysis, this was really a classic doji hammer in formation, and the more we go down, the less hammer we get. And so if we did get a pump tomorrow, before the close, and we close up in this range around resistance, then that hammer comes back into play, and doji hammers often lead to a trend reversal, which would be welcomed at this point, at least for those of us that are long. Um, uh, Conversely, if things close down here close to support, or worse yet, we lose support, then I got my eye on this, on this trend line. To be honest with you, I guess I would say the first test would be this lower low, which would be a good clear double bottom bounce from what we had seen and what we discussed yesterday in the golden cross scenario on that weekly time frame. So this would be my first stop, first spot I would be looking for to bounce from, and then of course trend line from there. If you lose the trend line, I hate to say it, but this thing might be over, and then we're going down to these probably 25-30K level. Would increase that probability for me. So that's about what I'm looking at here as we get ready for the monthly close. I hadn't even looked at fear and greed today, but meh, no, no, not a whole lot going on there. The ETF flows, not surprising, in the red yesterday, and I think we're hovering right around the average price that a lot of these ETFs are hovering at in terms of entry. So the fact that they sold the last 3 days while they were still in profit, probably not a bad idea for them. We haven't seen very many selling days out of BlackRock, and yesterday was the first one in quite a long time, as you can see. So how things shape up from here? Obviously, eyes on the Fed's rate cuts coming in September. Perhaps we find a local support here, rally back towards that, and maybe that becomes a buy the rumor, sell the news event. So a lot can happen between now and then, and those are things that we'll be looking for. I'm going to take one more look at FireCharts on the lower time frame to see if maybe some support will come in here and hold things up, because right now you're seeing suppression come in to push price lower. You can see sell pressure continuing from whales, purple whales especially are the ones I'm watching closest. So that is not looking super positive for the moment. With like I said, with a little luck, we could see things bounce from that 50K level. That would be a decent double bounce, in my opinion. And if we lose that, then to the trend line we go. Also remember that liquidity can show up on either side without any notice. So I will be watching FireCharts very, very closely here over the next few days to see how things move around in the order book, to see if we can pick up any clues from that. Going to wrap it right there, guys. Hope you have a fantastic weekend. Remember, it is a long 3-day holiday weekend here in the U.S. TradFi market's going to be closed on Monday. If you like the analysis, do me a favor, smash all the buttons. Especially make sure you hit the subscribe button so you don't miss any of the live streams. And please share a comment. I love and appreciate each and every one of the comments, and I engage with each and every one of them. So keep those coming. Really helps me grow the channel if you share this thing. So keep it up. Have a fantastic weekend, guys. Hope you get to do something you love with the people you love. Have a good one.